Hey, Bulls and Bears, it is Tuesday, February 21st, 2023, and we are back, and it is cold here in San Diego. It's been raining all night and all day, and I was watching a news report, and they said even though we've got the most rain at the beginning of the year versus the previous 10 years, we're still not out of the drought. We're still only 50% being done with the drought here in California. So as far as the groundwater being replenished, we're still a ways away, even though we've had record rain. So crazy times. But let's get into the news here because there's something happening with the banks. Loans are getting harder to qualify for, according to a report. We're going to talk about that here in a little bit. But other news, Janet Yellen had to come out and basically rescue the markets. Now, if you remember, a few reports ago, we talked about how Janet Yellen had basically threw gasoline on a fire as far as the banks and confidence in the banking system when she said, well, some banks may not be rescued. It's up to the board. We have to look at it and decide if it's not a systemic risk to the economy, then we may not rescue the bank, or we may not cover their depositors rather, or rescue the bank, both. So recently she came out and pledged more support for helping smaller banks. The way she sounded before, it was just the too big to fail banks. Of course, she didn't come out and say those words, but if you watch the video that we played in that report, you heard exactly what she said. She said that the smaller banks, the medium banks, the regional and locals may not be saved. The depositors over $250,000 may not be saved. So naturally, that caused even more money to come out of these small banks. And it almost looked like she was trying to implode the small and regional banks on purpose. That's how just ridiculous it was. Like, if you're trying to instill confidence in the banking system with the depositors, why would you say something like that? So recently she came out and kind of backtracked a little bit, but not exactly. Here's what she said. Take a listen to this and tell me if you feel confident in your money being safe if you have more than 250,000 in a smaller bank. Here's what she said, quote, "The steps we took are not focused on aiding specific banks or classes of banks. Our intervention was necessary to protect the broader U.S. banking system, and similar actions could be warranted if smaller institutions suffer deposit runs that pose the risk of contagion." So she still didn't guarantee any backing of these people with a lot of money at these smaller regional banks. Let's look at the words here. Actions could be warranted. That's not very definite, is it? If, there's the word, another word, if smaller institutions suffer deposit runs and that pose the risk of contagion. So if these depositors at small banks not getting reimbursed doesn't pose enough risk to cause contagion, then they're not going to be covered. They're not going to be insured. Or if they don't suffer deposit runs that pose the risk of contagion. So think about that. And would you feel confident that you're going to get paid if you have more than 250,000? This is going to be more confidence lost in the banks, especially with the larger depositors. And even with under 250,000, I wouldn't feel safe now that they're going to rescue anybody. I mean, look at this headline here. FDIC is in pretty big trouble here. This is out of Bloomberg. After Signature Bank deal, FDIC is left with $11 billion in, quote, toxic waste loans. $11 billion in toxic waste loans. We already know that FDIC has less than 2% of the funds available to cover all the deposits that would need to be covered. But now we're not just talking about 250,000 or less anymore. We're talking about unlimited. With what happened to SVB Bank, we made whole, or they made whole, the FDIC and the Fed in combination together, multi-billionaires, multi-million-dollar companies as well. Put yourself in the shoes of a depositor with more than 250,000 for a minute, and maybe you are somebody with more than 250,000. Do you feel confident that you're going to be insured if the bank fails? With those words, obviously the stock market liked what was said here. S&P 500 1.3% gain today. Dow Jones 1%. Nasdaq 1.58%. Russell 2000 was the biggest gainer of the day, 1.9% in the Russell 2000. Pretty amazing that we could have somebody come out and say a few words that really are not guaranteeing anyone being backed or insured in these banks. And yet the markets are still loving it. The markets are juiced. This is great news, right? Pretty amazing times, folks. Let's talk about loans. Loans are getting harder to come by, according to one study here, and these are automobile loans. Automobile loans getting harder to qualify for. A Federal Reserve Bank of New York study shows the auto loan denial rate rose to 9.1%, and that's a 6-year high. Now, that was as of February. When we see the March numbers, we're really going to find out what's happening with the lending, and that'll tell us the direction of car prices. Are they going to continue to soften and drop? If it's harder to get loans, then obviously car prices are more likely to come down. Here's the thing, though. March, with everything happening with the banks, it just started happening a couple weeks ago. Are banks going to be more likely or less likely to give out loans? I think it's going to be less likely, because just like the words we heard from Treasury Secretary, it doesn't sound like the depositors are going to be covered. And does that make banks want to loan out more loans? We'll have to see. We'll have to see what the March numbers bring, but we're already at 9.1% denial rate for people applying for car loans. You have the high interest rates and the prices that are high still. They've come down a little bit, but car prices are still very, very high. Record number of people with $1,000 a month or more car payments, should tell you that things are pretty tight as far as the consumer and their car loans. So what do you think about this? The 3 banks that failed, is that going to spur tighter credit conditions from the banks and make it much harder to get a loan? Or do they see that the money is just going to be printed and injected, or the bank's going to be taken over by a larger bank? So maybe they'll just keep on loaning up, keep on giving out loans. But we can see the denial rate is rising. So obviously they're not giving everybody loans. It's not like the subprime housing market in 2005, 6, and 7. So things are tightening up. So hopefully we'll see some deflation and more affordable pricing, at least in the car and automobile industry. Also, interest rates on new vehicle loans are the highest since the beginning of 2010. So over a 13-year high, the average is coming in right at about 6.82 as of this last report here. That's the national average, rather, 6.82 for a new vehicle loan, 6.82%. And the price of new vehicles now, combined with that higher rate, that's going to be a rocket of a payment. Now, speaking of interest rates, borrowing money, we already are seeing calls now for the Fed to pause the rate hikes, right? We knew this was going to happen. We knew that there was going to be something that jumps out of the woods, jumps out of the shadows to give reason to either pause or start cutting rates. And I think bank failures definitely fits that criteria. So here we go. The Guardian: to prevent more bank runs, the Fed should pause rate hikes. Do you think the Fed should pause rate hikes? Or do you think they should keep on raising rates? Or do you think they should hold them steady? Again, please let me know what you think down in comments. I think we should raise rates all the way to 20%. Let the collapse happen. Pick up the pieces, and let's start with a more sane monetary system sector, a sound money. Is that going to happen? Of course, no. But I do like to give my opinion. But here's what's going to happen. They're going to try to keep this propped up, and we're going to see a lot of consolidation with the banks. That's going to happen. We're going to see a push towards different types of controls into our money, how we can spend it, and it's going to be digital. Will it work? Will the people accept it? Or do they have to accept it? So it's going to be a very interesting year. This is going to be a year unlike any other year we've ever seen. Of course, every year is different. But the things that are going to happen this year are going to be historic and unprecedented, from the bank failures to I think the inflation. But the bottom line is, I see highly inflationary forces headed towards us here, with all the money printing, all the liquidity that's going to have to be injected into the system to rescue a lot of these depositors, if they choose to rescue the depositors. Remember, she said they could rescue them. So it's going to be inflationary, folks, and that's why I think you need to be in hard assets. I'm not giving investment advice. What I'm doing, I have gold miner stocks. I have some other stocks that pay dividends. Maybe they'll drop, but that's kind of where I'm concentrated. Continuing to accumulate hard precious metals, especially silver, as often as I can. And I thank everybody here for your assistance. You actually helped me. You see, when I used to invest more, before I actually had this YouTube channel, I used to invest more, and I was doing okay. I wasn't really day trading. I was doing something called swing trading. And sometimes I would hold a stock for a few weeks, sometimes a few months, as well as having some stocks that I held for the longer term for dividends. But since I've been doing this channel, I've had less time really to invest and search search out different stocks and things like that. So luckily the channel has made me enough to keep me where I was when I was making trades. So this is much more enjoyable. For example, when I was trading, I would be up at market open every morning. That was 6:30 a.m. Pacific time, and you know, a lot less sleep back then. And this is a lot more on my time schedule, so I enjoy doing these videos much more than I did trying to make extra money, extra income back trading stocks. So the little bit I do make on this channel definitely keeps me here. So thank you for your support is what I'm trying to say here. And I want to give a special thanks and shout out to the following people that helped me with a super chat donation here. Thank you. What I meant to say was thank you for the super thanks. That's the donation button down there. David Hervig, thank you very much for the double super thanks. Appreciate that. Jonathan Fong, thank you very much. I've seen your name down there before. David Amadi, thank you again for your super thanks assistance here and buying me a coffee, basically. Thank you very much. I did cut down on the coffee, by the way, but I'm going to use it towards tea because I drink this black tea now, which has a little caffeine in it, and it gives me that little bit of energy boost. But because of some skin conditions, I had to cut back on the coffee. I might go back to it. If I have a bad day, I might have a cup of coffee, but it's been about a month now I've been off coffee, so I've been feeling a little bit better, actually. I miss it. I miss the drink and the taste and all that stuff, but it's nice to be off it. It's nice not to be dependent on it for energy. So thanks everybody for watching. Big love, big thank you for being here. Keep stacking. Let me know what you think down in comments about this, and we'll be back with another update very soon. Hope to see you here then. Please like, subscribe, like what we talk about, and we'll see you soon. Bye for now. Peace.